Drop top dog. Selling my cars. I went from list to most wanted to the top of the floor.
This episode of My Two Satoshis is brought to you by Zank. Zank is not like any current stable coin available on the marketplace. With Zank, the coin is pegged or stable when in transit between one wallet and another. Additionally, at any point you can unpeg the stable nature of Zank and hold as a speculative investment. Visit xank.io to learn more details about this revolutionary free-floating cryptocurrency.
Never come back from Copperhead Road.
Yeah, it's your boy Crypto Blood, and welcome to another episode of My Two Satoshis. It is August 1st, 2019. Shout out to my man, BitSource AML Solutions Consulting out there on YouTube. The song request today, Copperhead Road by Steve Earle. Hope you guys enjoy that as some background music for today. What's good? Hope you guys are doing okay today. And welcome to another episode. So yesterday, remember guys, I told you about LedgerX finally getting approval on their Bitcoin's futures service. It was finally approved. At least the article said that. The first physical backed Bitcoin futures option. Well, it looks like that was a complete lie. I don't know who over there. I think that was out of CoinDesk. I don't know who over there at CoinDesk. How do you mess that up? Like, that's the type of thing where it either happens or it doesn't happen. You can't confuse or misinterpret whether a company actually launched and got approval by the CFTC and them not. Like, I don't understand that. But anyway, it looks like that was not the case. We're going to look into this a little bit further. That is just crazy, people. I wonder if there was some insider trading, some manipulation attempts there with the price of Bitcoin to profit off of that. You know, it didn't really even move up that much off the news. So we'll see what happens with that. Second article is out of CoinDesk, and I had this pinned from a couple of days ago, and it's about UK finance watchdog issuing guidance on regulation for Bitcoin and crypto assets. Looks like it's starting to circle the drain as far as regulatory clarity when it comes to UK. It's been kind of the wild, wild west for a while. And, you know, this article kind of goes into what is still not under the provision of the FCA and what is. So we're going to look into this and kind of give you my two Satoshis on how this will affect any of the ICOs that were originated out of the UK. You have to at some point realize that they're going to clamp down just as hard or as tough as the United States. The UK and the Eurozone are going to be probably on par with how stringent the US regulatory guidance is going to get, in my opinion, about cryptocurrencies and ICOs and fundraising and all of that. You would be a fool to think that it wouldn't. And the last article for today is a hat trick. We've got 3 articles from CoinDesk today. Fold app adds Bitcoin kickbacks for purchases at Target and Starbucks. So I don't know if you guys recall, but a few days ago, I talked about Safeway shoppers now able to get some type of kickback or change from their purchases as well. And that was through an app called Lolly. Looks like we're starting to see a trend here, Fold doing the same thing. Is this something that is sustainable and something that you think consumers will be interested in? I think so. I mean, it's a very non-invasive, non-threatening way to earn Bitcoin and accumulate Bitcoin, I should say. So we'll take a look at this kickback option in the Fold app for Target and Starbucks here in a second. But first, I want to give a shout out to my channel sponsors. Smartcash.cc voted #1 crypto in Brazil in 2018. Also, Moon Lambo. Save 10% if you use the word CryptoBlood10 at the checkout. And they're moonlambotees.com. Let's go ahead and take a look at this heat map. Bitcoin back above 10,000 today, up almost 1% to $10,085. Ethereum's down slightly, just shy of $215. EOS down 1.1% to $4.28. And we've got Litecoin up slightly, 2.5% is up to $98.92. And BNB has taken a turn for the better, up 3.78% to $28.62. And as you can see, we're right now looking to test that top side area of the channel I have drawn here. And if we look, yesterday we tried to test it twice. This one happened just before my 2 Satoshis video from yesterday, and I talked about that. But then after my video, it tested it again, and it looks like we're going for it one more time. Is it third time's a charm? Maybe. I think so. I think we're going to go ahead and take off from here. We'll have to see what happens. But I don't think we're going to see the scenario where we channel in this range here any longer. I think we're going to see a breakout. So I'll keep an eye out on it for you guys. I'm going to delete a couple of these things here. So let's take a look at what happened yesterday. Why the first U.S. physical Bitcoin futures haven't launched. It says that LedgerX admitted Thursday that it has not launched Bitcoin futures as the firm had previously claimed. So this came from the horse's mouth after the U.S. Commodities Futures Trading Commission said it had not approved the exchange to do so. Wow, the company previously told CoinDesk it was planning to launch the product on Wednesday. LedgerX would have been the first venue in the U.S. to offer physically settled Bitcoin futures, which are contracts that pay out in the underlying cryptocurrency rather than in cash. But it says here on Thursday morning, the day after CoinDesk's initial story ran, CFTC's Chief Communications Officer Michael Short, how fitting his last name is Short, said in an email statement, LedgerX has not yet been approved by the commission. And indeed, a look at LedgerX's data page shows only options and swaps trading that took place on Wednesday, no futures though. When contacted subsequently by CoinDesk, LedgerX Chief Operating and Risk Officer acknowledged that the company was not trading futures contracts. She insisted that the prior conversation with her and Paul about a Wednesday launch pertained to only LedgerX's retail platform, Omni, which she said is actively serving swaps and options products to traders at present. We are still operating. We're putting the products in front of retail. So this makes a little bit more sense to me now that I'm seeing this. I was very shocked, as I stated yesterday. They slipped in and got approval before ICE. I couldn't believe that. So it looks like that's not the case. So we're still waiting to see if they ever get approval. You know, I kind of changed my tune on whether or not Bakkt will be approved by the end of this year. But now that I'm seeing that LedgerX actually wasn't approved, makes me kind of second guess what I said yesterday. I may have to go back to my original of 2020 or really late in 19 to see a physically backed futures. And in the CFTC's own press release dated June 25th announcing the DCM approval, the regulator noted that LedgerX has requested that the CFTC amend its order of registration as a DCO, which limits LedgerX to clearing swaps to allow it to clear futures listed on the DCM. We'll have to see what happens. But again, I just wanted to give you guys an update on that and to let you know LedgerX does not have the clearance to trade physically backed Bitcoin futures as of yet. So I still think with this news, I'm thinking that Bakkt will probably be the one to see this passed before anyone else. You know, ICE owns New York Stock Exchange. Like, those are the really big boys. So, you know, the good old boys club is going to let those guys come through first, in my opinion. Then you will see everyone else come after. But we'll have to see what happens. I could be wrong. Just wanted to give you guys an update on what I reported on yesterday. Let's go ahead and take a look at this Fold app that now allows Bitcoin kickbacks for purchases at Target and Starbucks. The crypto payments startup Fold, which launched a portal for buying Domino's Pizza using the Lightning Network in February. I remember that and actually reported on that. Now offers cashback rewards in Bitcoin to shoppers who use the mobile app for purchases at Amazon, Uber, Starbucks, Burger King, REI, and Target, just to name a few. The in-browser app Lolly already offers this feature for desktop users and is developing a mobile app of its own. So I didn't know Lolly was only offering this for desktop users. I was under the impression that the cash back was also in the Lolly's mobile app. So now with Fold though entering the game, Bitcoiners might benefit from competition between shopping apps. But while Lolly offers an in-browser custodial wallet, which can also be used to send Bitcoin rewards to external wallets, Fold's app automatically directs the rewards to an external wallet specified by the user. So Fold's product lead said that it's akin to accruing reward points, just these are denominated in Satoshis. They can be used for purchases within Fold or withdrawn to an actual Bitcoin wallet. Fold's Lightning compatibility also sets it apart from Lolli. This is possible because while Lolli works directly with merchants, Fold partners with prepaid card networks and essentially buys a gift card with users' Bitcoin, then facilitates the purchase on users' behalf. The product lead developer said the Lightning Pizza feature has generated nearly $20,000 worth of transactions so far, with dozens of pizza purchases still rolling in every day. Executives at both Lolli and Fold now say their respective startups have thousands of active monthly users. Lolli's CEO told CoinDesk that in addition to launching a mobile app, his team has plans to implement Lightning options into the Lolli payout feature. So we'll see which one, if any of them, have you guys used. I haven't looked at neither of these. But again, I think this is a neat feature. It's a way for everyday person to start stacking some crypto without having to go to Coinbase and do KYC and do all that other stuff. This is a very frictionless way of acquiring Bitcoin. So look out for these types of features to be added to more and more platforms, in my opinion. The last one, though, guys, is out of the UK and is about the finance watchdog over there issuing guidance on regulation for Bitcoin and crypto assets. It says that the UK Financial Conduct Authority has finalized its guidelines on crypto assets, clarifying which tokens fall under its jurisdiction. Right. So here's what they have to say about what they call exchange tokens. It says true cryptocurrencies like Bitcoin and Ether are not regulated, though anti-money laundering rules do apply. Importantly, the guidance provides a definition of security tokens, and this is important here. When issued, these assets behave like shares or debt instruments, including ownership rights, thus falling under the category of a specified investment, and in turn, the FCA's remit. Utility tokens, by contrast, do not grant the same sorts of rights as regulated financial instruments and will generally fall outside the FCA's remit, except in circumstances when they meet the definition of electronic money and fall within a new category of e-money tokens. So this is what the agency said. Any token that is not a security token or an e-money token is unregulated. However, market participants should note certain activities that use tokens may nevertheless be regulated. For example, when used to facilitate regulated payments. Certain stablecoins may also meet the e-money definition, though, and hence would also be subject to oversight by FCA. The watchdog said, though, that market participants should use the guidance as the first step in understanding how they should treat each crypto asset. Definitive judgments can only be made on a case-by-case basis. I'm going to highlight this paragraph here. A firm can issue security tokens without needing a regulatory license, in the same way that issuing shares does not require a license. But in any scenarios in which the tokens are traded, the advisors and brokers handling the tokens and the financial promotions regime will need authorization, said the FCA. If a security token is tradable on the capital market, then it will further be considered a transferable security under the European Union Markets in Financial Instruments Directive, and the regime will apply too. So this is what they said directly out of the horse's mouth. So that pretty much, I mean, if there was a ICO or a token that was originated in the UK, you best believe you're going to see some tail risks from this. I'm kind of just warning you right now to read up on this further, because this will affect any of those tokens that, you know, that kind of originated out of the UK. The article, I'm not going to finish it all because it's fairly long, but it does finish with derivatives, and it talks about like CFDs and non-crypto CFDs and such. So I'll let you guys read those in details, but I wanted to highlight the part about e-money, what they call e-money, or crypto assets, what they're looking to regulate and what they aren't. So something you should be aware of, and let me know your thoughts about that in any of the other articles. I'm going to leave another poll for today. I want you guys to let me know which exchange or organization do you think will get the approval for the first physically backed Bitcoin options. I think it's going to be, in my opinion, now that I see that LedgerX did not actually get that pass, I've got to say I think it's going to be backed. But I'm going to put 3 up there: ErisX, LedgerX, and backed. You guys let me know your thoughts on which one will get the approval first. That's pretty much it, though, for today, ladies and gents. Shout out to my man BitSource AML Solutions out there on YouTube for the song request. Copperhead Road by Steve Earle. It's your boy Crypto Blood. Make sure you guys like, share, and subscribe to help grow this channel. And again, don't forget, August 16th, Grand Circus Detroit. We're going to have Max Bitcoin Rage Detroit going on. Max Kaiser, Stacey Herbert, and Crypto Blood. Join us for free August 16th, 5 p.m. You can find the link on my Twitter. It is pinned in my profile. And that's it, people. August 1st, 2019. I'm out of here.